The top business stories live from the Sky News City studio. Body Shop to shut half of its stores, with some closing today, putting 2,000 jobs at risk. The Governor of the Bank of England tells MPs that the bank may cut interest rates even before inflation hits its 2% target. Plus, Fiat UK calls for the government to bring back the plug-in grant to help boost sales of electric vehicles. Good afternoon, this is Business Live with me, Ian King. The Body Shop has announced that it is closing half of its stores in the UK, putting more than 2,000 jobs at risk. The embattled retailer entered administration last week, with administrators saying that the brand's current portfolio is no longer viable after years of unprofitability. Some of its 200 outlets will close today. Our business correspondent Paul Kelso has the details. Paul.
Yes, this a note from the administrators appointed a week ago after Sky News first reported that the Body Shop, founded way back in 1976 by Anita Roddick, was in trouble. In the jargon of the trade, they said the current store mix is no longer viable. That means store closures and it means job losses, both at head office and in around half of the 198 stores. The administrators say they expect perhaps more than half of those, so around 100 we can surmise, to survive. But 7 are closing today, 4 of them in London, others in elsewhere in the Midlands and in Bristol. They're saying they're going to cut headcount at head office to around 400 from the current 700. Won't be drawn on how many in-store retail staff will go. Suggestions perhaps around 1,000 are vulnerable. They're saying this is they do believe the Body Shop has a future, but it will require a much smaller footprint of stores. They'll focus on their products and their online offering. Of course, Body Shop, when it began, it was ethical and environmental before it was fashionable. Of course, now that is the starting point for any business, especially those that are in the cosmetics and beauty trade. Now everyone's doing that. Body Shop has simply found it impossible to maintain its unique advantage. So to see if this step by the administration is enough to ensure that its decline that has been underway for many years is halted and it has got a viable future.
OK, thanks, Paul. Now, the Governor of the Bank of England has said today the bank might start cutting interest rates even before inflation has reached its 2% target, telling MPs there were encouraging signs that prices were coming down. Speaking to the Treasury Select Committee, Andrew Bailey also said the current recession was easily the weakest since the 1970s and that the UK was probably through it already.
We have a very precise description, the definition of a recession in this country is two successive quarters of negative GDP growth. The 2 successive quarters, i.e. Q3 and Q4 last year, I think cumulatively add up to minus 0.5% on GDP. If you look at recessions going back to the 1970s, this is the weakest by a long way, because the range, I think, for the numbers for those 2-quarter numbers for all the previous recessions was something like 2.5% to 22% in terms of lost negative GDP. So minus 0.5 is a very weak recession.
Shares of Barclays have surged by as much as 8% today after it unveiled plans to return £10 billion to shareholders between 2024 and 2026. The news came as Barclays announced a major reorganisation involving the breakup of its corporate and investment bank and its payments business. Barclays, which cut 5,000 jobs last year, has refused to rule out more redundancies. Well, Barclays was reporting a full-year pre-tax profit of £6.6 billion for 2023. That was down 3% on 2022, but it was in line with market expectations. Well, earlier I spoke to Jerry Delmissier, the former Chief Operating Officer at Barclays and founding partner of Copper Street Capital.
Of course, in the last 10, 12 years, Barclays has gone through some restructurings and has de-emphasized businesses only, I think, to try to get back in 21. I think there was some bad decisions, not just, again, at Barclays, but a number of European players to misread the SPAC bubble of 2021 as somehow, this was the emergence of a European equity market that, could support a business. And I think that was flawed. And I think now you've got the Americans up here and the rest really scrambling for small bits of business that I don't think, candidly, makes any sense.
Now, during the last 15 years, 400,000 new businesses have been formed in the UK. However, over the same period, the proportion of productive businesses, those both creating jobs and sustainably growing sales, has fallen. That's according to research completed for 10,000 Small Businesses UK, a free business education programme for high potential businesses run by the investment banking giant Goldman Sachs. Well, joining me now is the head of that programme, Charlotte Keenan. Charlotte, good to see you this afternoon.
Good to see you, Ian.
So it's never been easier to launch a business, but it's becoming increasingly difficult to run one productively. Why do you think that is?
That's exactly right. So we launched a manifesto looking at and asking a number of our small businesses from across the country. So we spoke to 550 to ask about the challenges that they're experiencing, what they're facing, and ultimately what they need from the next government. So this is our small business manifesto, and it tells some fascinating tales about what they need. Now, you're absolutely right. Big picture, there are more businesses that have started in this country in the last 15 years. We know that the UK is one of the best places in the world to start a business, but they are struggling to grow. And what this report tells us is some of the reasons that they are struggling.
Well, go on.
So, many. I mean, firstly, I'd say, the economic context over the last 15 years and recently, right? We've had a pandemic, we've had a referendum, we've had a number of elections, energy crisis. And what our small businesses are telling us that they need is that they need stability and they need certainty. And this really is absolutely key for them. What they're also telling us is talent. They are struggling to find the right levels of talent that they need. In fact, 55% of them essentially said that they couldn't find the talent that they needed to grow their businesses. Now, this is huge, right? More than that, only 12% said that they thought our current education system was adequate in providing the next generation of talent in terms of employability skills. Now, there's a huge amount of opportunity there in terms of if we develop that focus on things such as enterprise education, we need to act for the long term.
That's quite surprising that they say that, given that the UK has been steadily marching up the international league tables on education attainment.
I think it's a question of the type of skills that they're looking for. And really interestingly, and I think this has really switched also in recent years, what they're looking for are communication skills, soft skills are the things that they're prioritising, rather than languages and perhaps some of the more classic kind of STEM subjects that we've seen in previous years. Again, something that we didn't expect to see. Finance, another big thing for them. Yeah. So over a third of our businesses said they were struggling to find the finance that they need in this country. And again, that's huge. A number of things that we can do to...
You mean access to capital?
Exactly. Access to capital, whether debt or equity.
Now, what about those businesses that are doing well? I mean, you've identified a number of what you call productivity heroes. What are the sort of characteristics that they have?
So this is a really interesting set of businesses. It's depressingly small, right? So we have identified 36,000 productivity heroes in the UK. And what that means is that they're businesses that are growing productively in the optimum way, i.e. that their headcount is growing, but revenues are growing faster. So this is why the survey was interesting to us. So if we take the cohort of Goldman Sachs, 10,000 small businesses, they exhibit many of the characteristics of those productive businesses. And they've accessed management education, they've accessed skills, they're ambitious, they're growth hungry. Critically, I mean, they represent a full range of sectors and they represent businesses across the depth and the breadth of the UK. The point is, right, that's a small number. It's just 3% of established businesses. And what we're saying is that we need to create more of them and we need to find the conditions for them to thrive in the UK.
OK, Charlotte, I'm afraid we're out of time. Good to see you this afternoon even. Thank you.
Thank you.
Now, the latest data on electric cars shows that sales are slowing, with private buyer sales down by a quarter in January year on year. Well, today, Fiat UK has called for the government to reinstate its electric car grant in next month's budget to help stimulate sales. Last year, Fiat launched its own electric car grant of £3,000. I've been speaking to Damien Daly, Fiat UK's managing director.
From the outside looking in, everything looks pretty good. It's up 21% in January. Since 2002, 1 million electric vehicles sold. But actually, when you look at the pattern and the trend, it's really starting to wane. It's really started to wane since the government removed their grant in June 2022. So if you look at January in isolation, it's only 14.7% of the total cars sold. Last year, it was about 16.5. So the trend is really quite negative. And if anything, Ian, we expected January to be a good month because it's the introduction of the new zero emission vehicle mandate. So arguably manufacturers were holding back. And in fact, it's quite the opposite, which is why we're doing what we're doing.
You want the government to reinstate the electric car grant. It was worth £1,500 when it was phased out in 2022. How much would you want it reinstated at?
Well, originally it was at £5,000, then it went to £3,000, then it went to £1,500. We've introduced our own e-grant at £3,000. Other countries have had, I mean, even Romania has had as much as €11,000. So we're encouraging the government to revisit it. I'm not necessarily into a specific amount, but it's really, really important. If it's not a grant, it could be tax breaks, it could be VAT, it could be an additional electric charger. But it's really, really important that we address this deceleration in the electric vehicle sales.
But what sort of level of support would you want to see the government offering?
Preferably something similar to what we've done ourselves. So at the moment, and we launched it last summer, on our electric Fiat 500e, we have our own e-grant of £3,000. We've now added this to our new 600e, so something very similar. And if the government were to do that, we will continue to do our e-grant as well. We're really, really serious about getting people driving electric cars.
Yeah, so you've introduced your own electric car grant, £3,000. To what extent do you believe that has stimulated demand?
We launched it last summer, exactly a year since after the government removed theirs. In fact, in June last year, we had our best month ever, but we've struggled, in all honesty, to retain that. It's really, really important that a key message is given out to the wider audience. It's quite confusing right now to be a consumer. If you think about it, originally the government were aiming at zero emissions by 2030. Now they pushed that back to 2035. So with no real incentives for the retail buyer, and it's the retail buyer I'm really talking to. On the corporate side of things, there's some good incentives. You can drive an £80,000 car as a company car driver for as little as £50. But for the customer, for the average person, for a family owner, family driver, there's absolutely nothing. So it's really, really important that we give those people a reason to buy, and a reason to buy now.
There is a perception out there, rightly or wrongly, that the typical EV buyer is quite well off. And some people might say, well, hang on, why should the government incentivise people like that?
And I can understand why that's the case, because at the moment, the area of the market which is doing particularly well is corporate. I mean, in January, it's 50% of the customers who bought, and it's those people who are getting a massive tax break from a company car. I mean, our vehicles, I mean, the average price of an electric vehicle in the UK is around £50,000. Our car, the 500e, with the grant, comes in almost half that. So it's not just, and it's really, really important, I think, that we shouldn't just make electric cars for the wealthy. At Fiat, we've been making cars for the masses. We're a family business. When we launched our first Fiat 500, way before my time in the 1950s, it was the car for the Italian people, for families. So it's really important. I think families matter as well. People who've got young children, they care about the environment, they want to do the right thing. It can't be just the reserve of the wealthy.
How much damage was done by the government delaying the implementation of bans on new petrol and diesel vehicles?
I think at a time where, I mean, you've got cost of living issues, there was no reason, as we're talking about now, to buy anyway. I think if anything, people are probably thinking, well, actually, that's one less reason to buy, so probably almost sleepwalking into buying a traditional vehicle. That's the real issue, is there's no real incentive, no real reason to purchase now, which is why we're really having the discussion which we're having, and why at Fiat we're doing what we're doing.
I mean, the other impediments to buying an EV, of course, is concerns about range anxiety and the charging network. Is that something that you come across quite often?
I think these are really valid points, and any consumer that's making any major change always concerns about these things. I think there's two things I'd say. First of all, on range anxiety, I mean, we make small cars. The Fiat 500e has a range of 200 miles. The 600e has a range of 250 miles. And our average driver, by driving a battery electric vehicle, the average journey is about 20. So in real terms, that anxiety doesn't necessarily exist, particularly for our buyers. I think infrastructure is a really interesting point. We've partnered, I mean, the key thing is about making it easy. So we've partnered with a leading award-winning supplier who has access on the move to 80% of the chargers in the UK, and also massive savings if you charge at home. And fundamentally, 85% of drivers are charging at home, so it's relatively easy for them.
Well, still to come here on Business Live. We'll have a look at how the markets are doing this Tuesday afternoon. Stay with us.
I'm Helen Ann Smith. I'm Sky's Asia correspondent, and I'm based here in Beijing. My most memorable story was covering the extreme zero COVID restrictions.
A massive COVID wave is sweeping this city, but officially, almost no one has died.
This is a 4-lane dual carriageway, completely shut off. Some things are being allowed in, but actually the only thing we've seen coming out is an ambulance. The message from China is clear. This is a modernized military, absolutely able to fight an international war if needed. Is this military ready?
We are prepared to face every kind of challenge.
My biggest challenge is adequately telling the stories of the Chinese people, even when the authorities would prefer me not to. By the rules, we are allowed to film in the streets.
To the left, to the left.
I will always remember the atmosphere at the Shanghai protests. It was an electric mix of excitement, fear, and defiance, and a sense that history was being made. It's hard to express just how incredibly unusual these scenes are in China.
There are people who are afraid.
On the streets of Xinjiang, there is still a tension. Heavy police, a sense they're always watching.
It's really an incredible eeriness to this place, and it just is completely abandoned. The Chinese housing market, for so long a driver of growth, is now a real liability. We take you to the heart of the stories that shape our world.
It's actually hard to describe the cold here. It's so intense. It literally takes your breath away.
I can't tell if I'm moving it or it's moving me, but it's a very strange feeling.
The world is watching what's happening here.
Slightly embarrassed, slightly better. Fly Emirates, fly better. Thank you.
Well, European equities have largely traded to the downside this afternoon. How they finished up in mainland Europe. Actually, they've had a not bad session at the close there. It was pretty miserable earlier on. the DAX finishing in negative territory there. One of the big talking points this afternoon is Air Liquide. The French industrial gases giant has finished up nearly 8.5% in Paris after its full-year results came in ahead of expectations. Well, here in London, let's have a look at how the FTSE has closed up. It's actually finished off an eighth of 1% lower or so. The mining heavyweights have been bearing on the index on the back of weaker copper prices. Several big gainers to mention, though. Barclays, of course, the chief among them. That's finished up 8.5% on its strategic update, while Intercontinental Hotels Group, that's finished up nearly 5.5% to the good after it reported a 70% rise in full-year pre-tax profits. Another gainer reporting today is the Chilean miner Antofagasta. That's finished up just north of 0.5% higher. Outside the FTSE 100, plus 500 has seen some interesting moves today. The online trading platform, that finished off 3.75% lower, having earlier been up 4%. That's on its results, while Mobico, the old National Express, is down by 9% on news of a delay to publication of its annual results. Over on Wall Street, returning from yesterday's public holiday, all of the main stock indices are lower just now. Talking points this afternoon include Walmart. That's currently ahead by some 4%, having earlier hit an all-time high. That's after it announced the biggest increase in its dividend in a decade. Meanwhile, Nvidia, the chip specialist, is off 5%. It's got results out tomorrow. Those are going to be very, very closely watched indeed. On the foreign exchange markets, well, sterling fell after the Bank of England Governor Andrew Bailey's comments that inflation didn't need to hit the bank's target rate before it begins cutting interest rates, but it has since rallied. You can see sterling now up 0.2% against the dollar, more or less unchanged against the euro. Single currency, meanwhile, up 1/3 against the greenback. As for the oil price, well, that has drifted lower today, but it remains close to its 3-week high. Barrel of Brent crude will currently set you back $82.34 a barrel. That's off a little under 1.5%. Well, joining me now is Sanjeev Tumkar, Head of Equity Research at Rathbone Investment Management. Sanjeev, good to see you this afternoon.
Likewise.
We've got to start with Barclays. I mean, it's the absolute showstopper today. One of the most unloved stocks in the market over recent years, but it's had its day in the sun today.
Yeah, it has. I mean, expectations were probably quite low going into this. It was trading on a 5 times price-earnings ratio, which is bargain basement, as you said. And what they've come out with is, results that weren't particularly spectacular by any means. In fact, they slightly missed on the profit line, but actually what they talked about in terms of their medium-term targets for 2026 have got the market very excited. I think the market's sort of feeling that if they can even achieve half of what they're setting out to do, then the shares are even cheaper than they look today. And the big highlight, obviously, is that £10 billion return of capital to shareholders, which equates to more than 40% of the current market cap.
Yeah, I mean, the thing is, though, they're targeting a return on tangible equity of 12%. But the business is dominated by the investment bank, which is delivering a return of just 7%. Everything else is going to have to run really much harder.
Yes, and I think that's the question mark that remains. So they're targeting the investment bank to reduce from 58% of risk-weighted assets last year to 50%. And that's by that business staying flat while they grow the rest of it. So, US consumer and cards, UK retail banking, and those other businesses have to move quite hard to grow to be 50% of the total. Now, they can achieve that, but will they have to take risks to do that? It was interesting in the results, their loan loss provision, so the bad loans rate was actually pretty encouraging. It was quite low. But can they grow the business sufficiently while keeping that loan loss rate low?
Yeah.
That's the question.
I wonder, the restructuring of the investment bank, I wonder whether they're preparing to sell bits of that off. This would give them the ability to do so, it seems to me.
That's definitely the signs that could be the optionality they're looking for, because it's true that when you've got an investment bank, particularly one that isn't one of the top-tier US global banks, which really control the market, then your quarter-to-quarter, even year-to-year profits are much harder to predict. And that's another reason why I think Barclays trades on a discount to some of the other UK banks.
Well, that's Barclays. Another positive reporting today, Intercontinental Hotels. Some good numbers there.
Yes, really good numbers from Intercontinental. Obviously, hotels are a cyclical industry. They had, in keeping with the rest of the industry, a very tough time during COVID when people weren't travelling for work or leisure. Occupancy was very low. But interestingly, Intercontinental Hotels still made a profit even at the very bottom of the cycle. And that's because they run a very interesting asset-light franchise model. So actually, they're not dealing with rental costs that they have to pay whether or not there's a full hotel or an empty hotel. They're just collecting a franchise fee from the people that run these hotels. And what they can offer the franchisors is, brand strength, marketing, common reservation platform, a loyalty card, all these things that make a hotel more attractive. And these branded franchise chains are actually taking market share globally.
Yeah, very good business indeed. Now, over in the States, we've heard from Home Depot today. What do you make of their numbers?
So a little soft. So I think the like-for-like growth, so same-store sales were, I think, down 3.5%, and they're guiding to 1% decline next year. So seeming quite soft. There was a good announcement on the dividend front, which was some good news. I think the market looks Home Depot very closely as a barometer of the state of the US consumer. And right now, what Home Depot is saying is that the US consumer is a little bit constrained. We've seen, obviously, rates go up, mortgage costs have gone up. I think one of the key issues with the US market is that the housing market has been very static because people can't afford to move. They've got these 30-year mortgages they don't want to switch.
OK, Sanjeev, got to leave it there. Good to see you. Thank you.
Thank you.
That's it from me. I'm back at 11:30 tomorrow. Do stay tuned. Up next is Mark Austin with the News Hour. Thanks for joining me. Cheerio.